Okay, everyone, and welcome to the midweek wrap up for the 19th of January 2022. It is a busy week, and it seems like every Wednesday that I do this, something interesting is going on. So let's just get right into it right away here. So we're going to start here with Bitcoin, just because for once it's the least interesting thing going on in the market here. Right, we're just sitting again. We have been for a long time at this $41 kind of area. Get that out of the way. Right, we've just been here, and we can see that this has been support here, resistance here, resistance here. So this 40,000 to 41,000 has been a big deal for a long time, and it just continues to hang out here. So until this resolves one way or another, there's really not much that I'm looking at in crypto, and not much I'm looking to do. And that's the way I look at crypto, is that I treat Bitcoin kind of like one would treat the S&P 500 when it comes to when it comes to trading these different instruments. It's the index, and I need the index to move some in order for any of these coins to move. What I will say is a lot of these altcoins have been kind of selling a bit dramatically. If we take a look at Ethereum here, it's got the same kind of level at 2,900, 3,000 ish is an area. There's a saying in technical analysis, you always draw your support and resistance lines with a crayon and not a pencil, because there's zones, right? So when I say 3,000, it's 3,000 ish. If we hold above that, this is just a pullback and uptrend. If not, we may have some further damage. And speaking of, let's just actually get right into the markets right away. We're going to go through a lot of different charts and layouts here today. This is the main chart that I want to spend a second and focus on a bit. And this is the top chart here is the S&P 500, and the bottom chart, is the SPY, and the bottom chart here is the RSP. So followers of the channels for a long time will know this already, so I apologize for ranting again. New people, first of all, welcome. Leave a like on the video. Check out my website down below for more analysis like this, my blog, access to all the trading tools that I use, that type of thing. But the difference between these two is that the SPY is cap weighted. So it means that the larger instruments in this are going to make more of a difference. So things like Apple, Microsoft, Amazon is going to make more of a difference to the S&P 500 than the RSP, which is an equal weight amongst all of these different securities. Now you can see the difference in kind of relative strength, relative weakness here in the SPY. And I'm mainly talking about this recent support level that we're approaching. You can see how far down this is on the RSP, how much room we have to go here versus how much room we have in the SPY. We're pretty much right there. So for both of these, I'm watching these prior lows, because if you have a time where a market approached an area twice and had a big substantial bounce off it, the third time it gets there is very interesting, although I believe a little less likely that it's going to bounce this time. So, keep that in mind, that we are kind of on the edge when it comes to the SPY. However, the RSP, not so much. So essentially, what does that mean, knowing the differences between the two? It means that this is kind of a targeted sell-off more than a very unique and specific sell-off. So, the big cap names have been holding us up for a long time. What this may be showing us is that these big cap, Apple, Netflix, Amazon, Tesla, these type of things may be cracking, and the underlying securities still may do okay. So when we get into that and we talk a little bit more about the different ETFs that I'm watching here, we can see that at work. So here's a list of all the ETFs, most of the ETFs that I follow. And we're going to sort these by, say like position in 20-day range. Let's look at the last month. And you can see that silver and gold are starting to move, which in my opinion is a little late, but makes sense for a market that's getting worried. However, oil still seems to be incredibly strong, as well as XLE, which is our energy ETF, is doing fine or phenomenal as well. So when it comes to times of inflation and when it comes to times of raising rates and things like that the market are worried about, it makes sense that this is going on, where the things that we're going to focus on are going to be things like real things. So there's an old saying, in inflationary times, you want things that if you drop on your foot, it would hurt, right? So that all of this makes perfect sense for the market rotating into an inflationary environment. We're noticing gross stuff selling off. We're noticing stuff that's real, that exists today, is doing well. And that has to do with time value of money stuff that I won't really waste anyone's time going over now. Some things that I noticed that are kind of bucking this trend that I'm going to keep an eye on is, well, KWEB for one. So KWEB is an ETF that represents the Chinese internet names. And if you just look at these last few days right here, where the market's been kind of straight down the last 3 or 4 days, this has been holding inside of a range. So KWEB to me is kind of interesting here, and maybe time to take a look at some of these Chinese names. Might just be more of an oversold rally than anything else. If we go into ARKK, this one's down, but it was actually down as much or a little bit less than the S&P 500. So basically what I'm finding from all this is I don't really see a dramatic end of the world crash sell-off going on, but another rotation going on. And that other rotation to me seems like it's going into names that have been not so much beaten up, but names that have been boring over the past 5 to 10 years. So again, think of your KWEBs. Try to take a look at some of the beaten up growth names, see if they have time to bounce. When it comes to flight to safety, think of utilities, right, which is XLU, so power, water generation, things like this, and think of consumer staples. So Johnson and Johnson's one that come to mind. Things that people need to buy regardless of the economy is going to be good or bad. Do well when the market's selling. Also, right, utilities are also something that you need. You need power and water regardless of the economy is good or bad. They're holding on as well. So focus on those areas, and I think you'll be way better served. So my personal watch list, which we can go through some of right now, is those kind of names as well. So if we look at J&J, for example, I'm looking at Johnson and Johnson. We have this prior or resistance right here, support right here, and it's now dancing with that support now. So if we bounce off this level, I'm interested in that one. You'll notice a lot of these are kind of looking the same. One thing from our relative strength algorithm, which I really, really love, and I encourage everyone to check out. It's called TI Strength Alerts. Again, link in the description below for all of that. It finds names that are not selling with the market. And you can see that CME, the exchange in which a lot of the stuff's traded, has been holding on really well for this level. So if we get a break and a close above this zone, that's where I'm going to be interested in CME. Some of these other names, let's just go through a handful of them. Live Nation, LYV. You can see a prior support zone right in through here. That's acting as support right here. If this kind of resolves the way that it's looking at right now, this is a potential inverse head and shoulders that could resolve higher. And I think we're at a pretty decent price to give that a shot. If we break down below that, obviously that's a problem. Other things like CSV, which is a funeral home service, as morbid as that is, but we have a little area of congestion right here and a prior resistance point right here that we're pulling back into this kind of dramatically, looking to see if we bounce there. So this is a lot of what I'm looking for right now, is what names have been strong recently and are just now selling off a little bit to look for when the market turns that are going to be more ready for a bounce. Avoiding things like Peloton, where yes, a bounce might be coming for this. Peloton's actually up today when a lot of these names are done. If you're more of kind of the bottom fisher, you may want to start looking at these. Maybe, the rotation is going to be back into growth stocks. If that's going to occur, which I don't see happening right now, you're going to see that in kind of the ARK versus Burke type of thing. So let's take a look at that. And we'll go ARKK and we'll go BRK. This is a chart, two charts that I love watching a lot of. where Berk B is going to be your value, your kind of typical boring value names, and ARKK are going to be more your growth names. So then the question is, if you start to see ARK coiling up and you start to see Berk B selling off, that might be your indication that, okay, now we're switching pace. Now we're going back into the growth names and out of the value names. So I've made kind of two lists, and this is how I would take a look at it. Not investment advice, obviously, but make a list of your growth names that have gotten hammered. Find a near resistance area. So let's go back to Peloton here, for example. You could say on Peloton, we've got some clear resistance up here at, $37. So, set your price alerts for when these things clear. You don't need to guess the exact bottom. You can wait for these things to break and hold certain areas before they continue. For me, though, I'm going to be focusing more on the names that have been strong recently, just making the bet that those trends are going to continue. If interest rates are going to increase the way everyone thinks they are, you never know. Fed could come out tomorrow and say, hey, the market's getting battered. We're going to slowly increase rates, or we're going to calm down the way we were thinking of. And then we're right back into growth being hammered and value being good. So final word, right? Don't panic. Pick your points, right? I've been talking about this $450 area on the SPY for a long time. I need to see a break and a close below this zone before I start to panic. On RSP, which is something I like to watch a little more, you're talking about 150-ish bucks, 150 to 152. As long as we're above that, I'm not incredibly worried. If we start to break down below, that's where I'm going to panic a little bit more. But again, stick to your plan. Know that sometimes swing trading, which is what I do, isn't going to be very fun. You're going to get stopped on a lot of positions, and you're going to have to kind of make up for that and move on. Again, just be light on your feet. If we're going to enter a bear market, this is kind of a long way off. But if this is something we are going to see, the way that I deal with it is I shorten my time horizon and I take profits much, much quicker, because a lot of people say if we're going to be in a bear market, I'm just going to start shorting things. I personally don't agree with that at all, because we know the biggest bounces come in the bear markets, and shorting is a much harder game, in my opinion, than buying things. So what I do is when the market's selling, I make these lists of whatever's not selling, like CME that I showed you. They're not selling that off as the markets are selling. So if the market bounces, I know the names that the institutions didn't attack, and in my opinion, those have a better than normal chance of bouncing. And I'm ready to go. I can enter those, but because in bear markets you get these big, huge bounces and then sell-offs that come right after, I'm quick to take my profits when I have them. I'm quick to move my stops to break even. So not shorting for me, but being more nimble is how I deal with these more volatile markets. So hope that helps you guys. Now is a good time to develop a plan for the what if. And then, again, maybe the Fed comes in and we just rally to new highs, and that's the end of that. But now is the time you develop your plan, and then you kind of move on from there. So I will talk to you guys soon. Again, leave a like on the video, link in the description below for all of my stuff and how to follow me, and I'll talk soon.